Welcome everyone. Good to have you here. Time for another live stream. Yeah. Price moving towards the upside, and I've been actually really like patient today, I'd say. Also with regards to the content, because the probabilities of the previous video played out, and as price was moving up and volume increased, I was like, yeah, there's actually not too much to really talk about, because of course we're looking either for an impulse or we're looking for a WXY double zigzag for a larger corrective structure. So I was like, yeah, let's see what price is going to do. Maybe it's going to form a range or whatever, but we don't really have a range yet. Nonetheless, I was like, you know what, instead of a video, I might as well just go live, answer some questions. Maybe I saw Ryan, was it Ryan here? Maybe have a look at the weekly time frame, right? Or the daily. I'm not sure if the weekly is really super interesting, but the daily. We checked the daily actually in the previous live stream as well. So yeah. Good. So welcome everyone. Welcome. Good to have you here. Here's the chart, and here are you guys. So welcome. Vishay, Obelisk, Bell. Good to have you here. Almost first. You were first of the people on the third place. If that makes sense. Kun. Lemongrass, welcome. I'm not gonna lie. I really dislike the auto YouTube chat translator. I haven't yet figured out how to remove it, but YouTube trying fancy things. And sometimes YouTube actually translates stuff to Dutch, which is, I do everything in English, even though I am Dutch, and probably it knows, even though my studio is actually in English. So that's interesting. I don't know why it uses the translate tool, but nonetheless. Ryan, what's up? EWA, how you doing? WXYXZ. And Iman, welcome. What do you think on the 4 hour? Yeah, I'm gonna cover the chart. So let's just jump in, though. So what we can do is start on the higher time frame, and then just go down, and we'll do Bitcoin, and then I'll answer some questions and stuff as well. Ryan asked about the weekly time frame. Yeah. Okay. Yeah, we can start on the weekly. We can just do a full run through, basically, where we do the weekly, then the daily, and then the 4 hour time frame, and then like the 1 hour 15. We just go down the time frames, I suppose. Could be good. Got my bottle of water with me, so it means I can chat. Keep the throat in good condition. 4 hour after impulse. Yeah, it's either impulse or WXY. That's the two options. With an impulse to the upside on the 1 hour, you still expect at least one more 4-5 minimum of decent size. I'll explain it once we go to the 50-minute 1 hour time frame. But for an impulse, you at least expect one more 4-5 related in size to the first 1-2 of the 75k low. Right. So the two there. Weekly setting up maybe 5 + 4. Hey, welcome to the channel, Hans Temba. Welcome, J Trader. What's up? Weekly setting up to be a 5 + 4 down. Yes, that would be the bearish case. Nice that you are using Elliott Wave numbers. 5 + 4. Oh, he knows. I covered it in the recent video. The Elliott Wave numbers. It's actually in the book, by the way. Actually, I don't really know what page. It's not really something they highlight in. It's not really something they highlight in Elliott Wave Principle. But somewhere in the book, Elliott Wave Principle, they talk about the numbers, and I don't know. It always stuck with me. Surprisingly, though, not many people are aware. It's a fun little fact. It's a fun little fact. I actually don't think that we cover it in the compendium because it's already an Elliott Wave Principle, and we built something different. But yeah, it would be more fitting to implementation, which would be the second book. The second compendium is focused on implementation, and I think the counting guideline there with 5+4 or 3+4 is more an implementation thing compared to a really theoretical thing, you know. But it's interesting. Can we get 34 likes? I don't know. Can we get, where's the, I don't even know anymore where I see the amount of likes. It's been so long since I really checked that. Oh, found it. 15, 15, halfway there. Okay, let's start. Ethereum. Oh yeah, we can have a look at ETH as well. I heard ETH is really messy. I kept an eye on what's happening in Discord and people talking about it. But okay, let's start on the weekly. This is local stuff. I don't know, I'll just leave that there. I'm gonna move some of my folders up. That's a lot of folders. Okay, so this is, so we're gonna go weekly, daily, 4 hour, 1 hour 15 is like the same thing. And then like 1 hour 15, let's separate that. And then maybe even go down to like, who knows, 1 minute time frame. So we're gonna go through the whole thing. And I'm gonna try to do it as quick as possible. Okay? And then we can get to conclusions on every time frame or probabilities. I'll just, you know, we just go through the analysis and you'll get a good idea of what we're looking for. So let's start. I actually learned now that I can have stream markers. So what I'm going to do is click the stream marker button, and hopefully after the stream, it's easier to find where I put the timestamp. So markers appear in the video editor after your stream ends. Perfect. So let's start on the weekly time frame. Bitcoin. So we were looking for a move towards the downside. The structure that price formed to the upside from the low at 15K was very similar to what happened in previous bull markets, where you start with an overlapping structure, right? Also, if we include this bit here, you start with an overlapping structure followed by acceleration, and the acceleration phase creates a gap, right? It creates a steep move to the upside on increasing volume, followed by the ranges returning, right? And you will see this time and time again. And that increases the probabilities to look for a move towards the downside. Now, we're not counting this in detail, how many 1-2s, how many 4-5s, and this and that, right? It's just the general structure to the upside, generally an impulse, right? General impulsive move. Start with the 1-2s, get the 3 up, 3 creates a gap, then you get the 4s and the 5s. And then you're looking for a retracement. The minimum target is a 0.382 Fibonacci, taken from the low to the high. And currently, if we put this on a log scale, right, the fibs are on log as well. We're on a logarithmic chart, and the Fibonacci setting here is log. Right? Then you can see that the 382 is not touched. That's actually quite interesting, 56.6K. If I turn logarithmic off, you will see it is touched, 84K. What to say about that? Now, preferably, as we are on a logarithmic scale, which we want to use because price moved up by almost 700%, so 1% in price is very, very different here compared to here, right? So we want to use logarithmic to even things out. Ideally, the fibs are used on log as well. So preferably, price would reach 56.6K at a later stage, right? And I say at a later stage because of my daily time frame analysis, which is coming in a little bit. But yeah, it's not been touched. And this is commonly your minimum target, which is just, it's very simplistic. We're not counting in detail here. It's also like a bit of Kuhn's theory that I throw in here. We basically have overlap, sharp move, overlap, price eventually falls, cool. Minimum target would be the 382. We're on a logarithmic chart. We use the logarithmic fib, not touched. For any retracement on any time frame, generally the 382 is the minimum time that you want to reach, as well as the 382 Fibonacci retracement is generally the minimum fib that you want to reach. So it's most common, right? It's most common, and it's not reached. So that is interesting. Now, with regards to scenarios, I have a couple of things, and I need to turn them on to see if it's relevant or not, because I haven't looked at this stuff for quite a while. A lot of daily, what's this? Okay, what's this? And this, okay, 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 this is not relevant. We can move that out. I'm just quickly going through my folders because I don't often look at the daily and the weekly time frames. This is all really old stuff. Okay, so anyway, yeah, so on a weekly time frame, ideally, and this is mixing the daily time frame in here as well, ideally, price is moving to at least 79.7K. And this has been said in the previous live stream of mine as well, which was, I don't know, was it last week? Welcome, John. Good to have you here. And the reason why, preferably here, price is moving to minimum 79.7K is because, there you go again, the 0.382. Taken from the start to the end of the move, as preferably something is finished here, which I'll explain once we go to the daily time frame analysis, but preferably this low is the end of something. And if that is the end of something, we're looking at a finished structure here, which means that your minimum retracement target would be the 0.382, which is not touched. So ideally, price still finds the strength at some point to move to 79.7K. Now, I've seen many people talk about 85 and 90 and this and that, and you know, it doesn't mean that because the 382 is a minimum target, it has to be reached in one go. Heck, it would even be quite interesting if price would do this and then move up. Like A, B, C, W, correction, X, and then be like, there we go, reached into resistance and go down again. You know, would be quite interesting though. Also from a psychology point of view, but we'll see. Like locally at the moment on the lower time frames, the probabilities are highest that the move down is corrective, as explained in my video yesterday, that if price is going to make another high after yesterday, basically, so after midnight, it's going to be problematic for the bears, and we would expect price to move towards the upside. Yeah, here we are, 78.5K. Again, so locally, I would like to see the 0.382 touched. And on the weekly, preferably 56.8 is going to be touched at 56.6 is going to be reached at a later stage. And that is just purely based on minimum retracement targets. If this move to the upside here is a finished structure, then preferably you move to at least a 0.382, which commonly in Elliott waves in general on any time frame tends to be a bit of a minimum target. Except if you go to the monthly, because on a monthly time frame, the chart is a little bit odd. This is not the full chart. I'm on Coinbase, not Index, not Binance, not all that stuff, Bitstamp. So yeah, but on a monthly, things are a bit different. So yeah, we'll see. With regards to scenarios, we have this one here. This would be your, I suppose this is short-term bullish, long-term bearish, honestly. A lot of the weekly scenarios, as you'll see, depend on the price action on the 4-hour. So this is what is going to decide the probabilities on the weekly. I just show some scenarios so that we have an idea of what we can look for. Now this one it's quite interesting. However, an extended wave 1 impulse is not a very common structure. Right, long 1, 2, 3, 4, 5. Extended 1, it's the rarest impulse. Most common impulse is an extended 3. Most commonly, the same wave of an extended wave is extended. So preferably on the lower time frames, you have another extended 3 impulse inside wave 3. That's most common. Then you have a 1, 2, 3, 4 extended 5. That's on the number 2 position. And an extended 1 impulse is your rarest impulse, but that would be the count here. So 1, 2, 1, 2, 3, 4, 5, 4, and 5. 4 also went maybe a little bit deep, as ideally your wave 4 of a higher degree retraces to wave 4 of a lower degree, which is the price action here, sitting between 108.4 and 74.4K. You can see that price moved not only below the low over here at 74.4K, but also closed many candles below that area, which is not ideal, as preferably you like wave 4 of a lower degree to hold. So is this the highest probability? It's a little bit tricky because of a high, extended wave 1 and a deep 4 compared to the lower degree 4. Has to be said at an extended 1 impulse. You know, if wave 1 is extended and not your wave 3, then your higher degree wave 4, yeah, sure, it could retrace below the lower degree, but nonetheless, it's not invalidated. We keep an eye on it. Bullish case, this is what the bulls love. 1, 2, 3, 4, 5. The whole world is watching this. A, B, C, and up you go. All right, take out all-time high. And the bearish case is what the bears want to see. Everyone knows about this already. 5-wave structure down, 3-wave up, 5-wave down, and then eventually we go up again, or not. But that's stuff we can discuss at a later stage. So the move towards the upside here matters. Is it corrective? Is it motive? That's currently the most important question, because this move to the upside on a daily time frame, 4-hour time frame, decides the weekly time frame probabilities. If this is corrective to the upside, we're looking for another leg down for price to take out the low, most likely. No. If this is motive, we could look for all-time high. Simple as that, basically. A couple of fibs that you want to have in mind is the 0.382, the 0.7, and possibly even the 0.9. So the 0.382, minimum retracement target. Probabilities are high, something finished at this low at this stage. So we would like to see 79.7 touched. Again, it doesn't have to go in one go. I mean, we're close, so chances are you do. But mind you that you could also just create a larger corrective structure and then move up. Doesn't matter, it's just a minimum target. The 0.7 is relevant because if the 0.7 at 101 is touched, the probabilities decrease for a, well, actually in this case, we wouldn't count this a W. So the 0.7 is not even relevant. The 0.7 is relevant for a double zigzag, ABC, WX, and then an ABC down and Y, but we're not counting this as a W anyway. This would be counted as a 5, not a 3. I mean, the bulls could maybe force a 3 in here, like WXY, XZ, right? Or a WXY. But the 0.9 is important. Reason is that if you count a WXY to the downside, a double zigzag, this is your minimum target. Yo, Caleb, what's up, mate? Oh, I have to reply. Caleb, we're going to be in South Africa for the electric race, so unfortunately we can't join. Sorry, man. But thanks for offering the tickets. Very, very kind of you. But yeah, we're going to be in Africa, so but hopefully see you soon, maybe before we leave. So the 382 minimum target can absolutely go higher. This is your first major resistance here, this range. Generally would not expect to see it passed in one go. Commonly, you would expect resistance and a retracement, or at least another range inside that area if price is going to move up there, instead of price just doing that. Okay, with regards to scenarios on the daily, this was an alternative. That's not relevant. Double Z, yeah, so here are the two. I think I had two. Yeah, finished impulse. What's this? Okay, that's other stuff. So initially the question was, is this maybe a wave A of a double zigzag? Or did we finish an impulse down here? Now for a double zigzag unfinished, we wanted WX and then an ABC down in a wave Y. The issue is that your B is very long now compared to your wave A. It's over twice, I think even more, by the way. Easily, what is it now? Over 3 times, almost 4 times the size of wave A. Not great. Your wave Y is over 2 times the size of wave W in time. Not great. And you don't even have a wave C yet, so you're going to reach a 3. Not great. So therefore the probabilities are higher. You end at something at the low. And I don't really care much if this is a WX and a wave Y, or if people count it as a 5, because in both cases, your minimum target is the 382 anyway. The only difference is that if you count a finished WX and ABC and a Y, your minimum target is the 0.9 at 110, or wherever it was. Where was it? The 0.9, 117.2. All right, so you count it as a 5 or you count it as a WXY. For risk management purposes and safety, it is better to count it as an impulse compared to a WXY in order to manage expectations. Because if you count this as this must be a WXY, and you hold or want to hold till 117 because that's your minimum target, you're going to be very disappointed if this is a 5, a 3, and price is going to continue down, and there you are with your position and price falls because you're hyper-focused on 117. So counting this as an impulse down gives you more analytical flexibility. Plus, it keeps you alert on how to manage positions. This move to the upside, again, is going to decide the probabilities on the weekly time frame. At the moment, we still expect higher on the daily, right? Because we want 79.7 touched minimum. That's the minimum target when something is finished. And the impulse is this one. So finished impulse, 5-wave structure. C, A, or 1. The bulls are looking for a wave C and a flat and continuation. The bears are looking for A, B, C. Or 1, 2, 3. Minimum target, it's the same. The bias, it's the same as the bulls. The only difference is that the bears want a corrective move up and the bulls want a motive move up. Now the bears want to end a corrective structure at least after the 382. Minimum target is reached. 382 is reached. It's just that the price target isn't reached yet. So if price is like, wait a second, I'm not going to go up right now, let's go down first. The bears still like to see another move up later to touch 79.7. That's the bias. Also makes me think that in February I made a video where I didn't do any Elliott Wave analysis. I was talking about the monthly time frame in that video. Maybe some of you that were here in February will remember that we were talking about the red candles, and I did some analysis, and only twice in the history of Bitcoin did we have 5 red candles in a row. One of the 2 times was even 6 candles in a row. And I explained that the probabilities are high for March, April to be green. Right, so that gives you a little bit of a bias for the months. Now, at the moment on the monthly, we just have a straight line to the downside. So we can't like analyze the monthly time frame with the move down. But just purely based on the amount of red candles, probabilities were high for green ones. So that kind of gave you a bias. Even trading the lower time frames, you then know that, well, probabilities are higher for price to move up in March and April compared to the opening price. Now that it's May, we have to just wait and see. Beerabit has a lot of data that he sometimes posts in Discord about the different months and stuff. So if you're interested in really hardcore data on months, just ask Beerabit, and he likes to share his data, which is fascinating stuff. But yeah, so that's what's going on the daily. Is this corrective or is this motive? Well, the bulls would look for a multi 1-2, 1-2, 1-2 up. I would prefer, based on also, just like on the weekly time frame, right? Like what we did at the beginning, we have a bit of overlap here. Right? Price is curving vertical here, and now you can see this. You see what I'm drawing here? I'm just connecting highs and lows. You see this S structure, this S-shaped structure, which increases the probabilities for a move down. Right? At some point, we want to see a move down. 382 at 73. Wait, we shouldn't be on log. 73.9. Right? Now, also, volume has been decreasing as price is moving up. Volume is going down. It's quite typical for an impulse to the upside reaching the final stage. Now, an impulse may already be finished, and this could still turn into a flat. A, B, C, 382, and then we go up. Perfectly fine. But you would preferably reach to 0.382. And ideally, an impulse here has finished, or maybe you create one more high here as a 5, and then price falls. And then you will go to like 80, low 80s, and then you move to the downside, which means your 382 is a little bit higher, and you would expect a retracement to say 75. But it looks like, from an Elliott Wave point of view, this here is coming to an end, which therefore means the probabilities increase for retracement. Therefore, the bulls would look for a 1, a 2, another 1, another 2 of lower degree, and then up for a 3. similar to what you had here. 1, 2, 1, 2, 1, 2, boom. In order to get strong acceleration to the upside, in order to see this on a chart, you need multiple 1, 2s. So this is like your messy phase till eventually everything becomes clear. This is what the bulls want to see. The 1, 2s. Higher highs, higher lows on the daily time frame. And ideally, we are keeping an eye on a potential retracement here. The move from 65, very, very nice. Right? Awesome move, really good, but probabilities increase where at the end, towards the end. And we're looking for a 302 touch. Maybe one more 5, but I would not, at the moment, from an Elliott Wave point of view, we wouldn't expect price to just do this. Doesn't really make much sense at the moment. To just go straight up. So preferably look for a retracement. Okay, and the bears are looking for a 3-wave structure, and they're also then looking for a retracement, but of course they just look for a motive wave down. So there we go again. So locally, it's interesting to look for a move down at some point. First of all, probabilities are high to see 79K taken, as per the video yesterday. Right? But because of this structure, decreasing volume, curvature from vertical to more horizontal price action, probabilities increase, something is finished, and we're looking for a retracement. Now then the question is it corrective or is it motive? We'll have to wait and see. Because the bulls want a corrective structure down to see price move up. The bears want a motive wave down, 5 wave, 3 wave up, continuation down. We will be able to analyze this. We'll be able to analyze this. We just need the information. Matter of time. Now, what we do know is that we like, on the daily, 79.7K to be reached. So if price would turn around here without seeing 79.7, the probabilities are high. Something is not yet finished here. And we are still looking for another leg up in both the bearish and the bullish case. If price, however, moves up here and reaches 79.7 and then drops after creating a high at whatever here locally, 80, 81, whatever, and then it drops, there is the potential for a finished structure and for price to continue down to take the low. That depends on the retracement, corrective or motive. We'll wait and see. We'll wait and see. That is why I make frequent videos. Because the lower time frames, in the end, like that's the thing. In the end, the lower time frames decide what's happening on the higher time frames. Probabilities always first change on the lower time frames before they change on the higher time frames. That's why the lower time frames are so attractive, because you can get in to positions on the lower time frames. And if you're already positioned and then on a higher time frame, probabilities change in your favor, because again, low time frame, probabilities change first, then later on the higher time frame. It means you can hold on to longer swings. Jay, I'll have a look at that in a bit. So yeah, okay, so this is the daily, like this move towards the upside. Let's go to the 4 hour. Let me see what I have going on here. Oh yeah, so I have a couple of stuff. Okay. Oh yeah, that was yesterday. This is let's just remove all the 1 hour stuff. This is 15, just organizing here. Let me move my weekly stuff out of my main area. W. Okay. So the question is, did something finish at the high or not? Because the probabilities locally, as per the video yesterday, if you make another high after midnight Central European time zone yesterday, which is if you make another high locally today, Central European time zone, the probabilities are low for a bearish multi-1-2. They decrease for a bearish WXY. They increase for an ABC down, which means we're looking for a move up. corrective or motive? We'll wait and see. Well, quite clearly it was motive because price just kept going up. So it wasn't really much to talk about in making a new video. But the probabilities are highest that this move down is corrective. Therefore, the probabilities are highest to see the 79K high taken. Now, that doesn't have to happen instantly. It's the bias. The bias is take out that high, and maybe price will do that instantly. Maybe it creates a larger corrective structure first before doing so. But if price is dropping from here down, the only information it gives you is even better long opportunities because your bias is up. Because the probabilities are highest that this is corrective. So if we want to have a very nice long opportunity, then ideally price is not taking out the high and instead continues this range or goes down. Maybe like a regular flat. A, B, C go down here. Reason is that the probabilities are very high to take out that high. So any lower price is a great buying opportunity as long as the high is not taken. Of course, you need a bit of a plan, right? Need a plan, need a strategy and all that stuff. Where price is at the moment, over here, not a great buying place, no? I mean, people may be FOMO into the top, which is always a bad idea because the long should be taken down here, not up here, right? But yeah, you get the idea. If price takes out this high, which is the local bias, and price retraces, well, we'll have to see because it is possible that the corrective structure to the downside, let me just remove this. So it is possible that this area is 1, 2, 3, 4, 5, 3, 4, and this is your 5. This is the impulse, if you want to see it in its completion. And that you're working on the 5. And if price were to move up and take out the high, it's possible that you finish a 5 here, right? Get some wave 4s and 5s locally, move up a bit, and then drop. If you finish wave 5 here, you're looking for a retracement. Now, as per the daily time frame analysis, this high for the bears would be a wave C and preferably touches 79.7K minimum. For the bulls, this is preferably another 1. So is it a 1 or is it a C? Well, we'll find out based on the move down. Is it corrective? Is it motive? Will it be a 3 wave? Then we look for up. Is it a 5 and then a 3 wave up? We look for down. Easy. We'll figure it out. Well, we don't have the information yet. The only thing we know if we combine the time frames is that on the daily, we can see that price here is curving. So it's more interesting to look for retracements. On the 4-hour time frame, we see this here, where it aligns with the daily, this scenario, where you're looking for maybe another 5. Maybe your 5 here is already finished, right? And this was your 5. But if so, then this would be first structure. You're still looking for a larger corrective movement because you want that 382 to be touched. And it's not touched. So if that's the end of your 5, you want a larger corrective structure. And if price moves up, couple 4 5s over the weekend, whatnot, then make a new high maybe on Monday and then go down. Okay, that's perfect. We're still looking for the 0.382, then pulled from the low to wherever that high is. But it looks like things are slowing down. So we're looking for retracement, more interest. Even though probabilities are highest to take out the high. Hopefully that's not confusing because I'm doing multi-time frame analysis, you also get different probabilities per time frame, right? So locally on the 1 hour, right, like basically here, probabilities are highest to take out the high. If price does not take out the high now, cool, great buying opportunities at support because we look for price to move up to take out that high. It's the highest probabilities. Reason is that the probabilities are highest. This is a 3. At the moment. And if price moves up and takes out the high, then cool, those probabilities play out, but we're still looking for a higher probability drop after. The thing then is the higher 1 or a C? If price makes a new high here, and it would be an impulse in a wave 5, is it 1 on the daily or is it C? We've got to wait for the retracement. It doesn't make sense to fantasize about it must do this or it must do that. Now I have a little bit of a funny count on my chart. This is a WXY, which is an alternative scenario. This is a wave ABC, WX, AB, and a wave C. It's not very chic. Also, this has to go down. So this would be a scenario where you basically continue up. But the funny thing is that if price were to continue up from where it is now and it goes up, bulls will be very happy in the short term, because it's actually not great for the bulls to go up here, because the probabilities are higher. You're then looking at a corrective structure if price continues up 1, 2, 3, 4, 5 and then go down. You expect the lows to be taken at 60K. What the bulls want to see is 1, 2, 1, 2, 3. They don't want to see 1, 2 continuation here, because probabilities are higher. It's WX and they have a wave Y. Probabilities are very low that this here is just a bunch of 1, 2, 1, 2, 1, 2, 1, 2, 1, 2, 1, 2, and 3. Very low. Not what we're looking for, right? I have a scenario like this, but it's also, again, not your highest probabilities. So it's not what the bulls are looking for. This is an impulse up, 1, 2, 3, 4, 5, finished. That's your 1, that's your 2. They have another 1, another 2, and up. And eventually you look for 3 and continuation. The issue is that wave 2 is incredibly shallow. Wave 2 reached the 0.236, which is a rare target for 2, because generally the minimum target is the 382, which is by far most common. So wave 2 retracing to a 236 is very rare. We cannot primary or put this scenario on the primary. Like, this is not a primary count. This is always going to be an alternative. This becoming primary is going to be hindsight, not at the moment. At the moment, your primary locally is either finish a 5 or 5 is finished, and we're looking at a larger corrective structure. Like, those are your two options. If 5 finishes, look for retracement. Larger corrective structure, look for retracement. On the 4-hour time frame, okay, because on the 1 hour, the probabilities were highest, as per the video yesterday. If you create another high, let's see this. If you create another high, working on it. So here are the fib times that I spoke about in the video yesterday. And I said, if you create another high after yesterday, which in other words is today, Central European time zone, which is basically after midnight, which is somewhere here. If price can create another high, probabilities are low for the bearish scenarios. 1, 2, 1, 2 down, W, X, Y, right? Low probabilities. Probabilities are higher that the move down from the high is an ABC, where this is a wave C. Which therefore then means, of course, probabilities are higher to move towards the upside. I don't know if I have that still. No, that's other stuff. So yeah, and then we have to observe, is the move towards the upside going to be motive or is it going to be corrective? Now, not going to lie, this range last night was a pain in the ass. That was a messy range for the ones that were in Discord chatting, myself included. This was a messy range. Now, I'm happy the Elliott Wave probabilities, though, played out, because the 886 was touched, and this first move down was very much a 3-wave structure on the lower time frames, increasing probabilities to take out the high, which then happened during the night. So it's the probabilities from an Elliott Wave point of view played out, but it was a very messy, very time-consuming structure. It took a long time. What's up, Legendario? Yeah, but price moved up. Is it corrective? Is it motive? Well, you just wait for information to come in, and at no moment in time did it even change the structure. It's just higher lows all the time. Volume increasing as price is moving to the upside as well. Currently, the highest volume sits in the high. Bulls are looking for minimum a 4 and a 5. The bears could have a top and look for retracement, but that stuff I'll cover in a second. But yeah, on the 1 hour time frame, because the probabilities are highest, this is a 3. As per the video yesterday, when you make another high locally, the probabilities are highest to take out the highs at 79. And if that happens immediately, or if that happens after a larger corrective structure, doesn't matter because the bias is set. The bias is take out the highs. And as explained on the 4 hour time frame, if price does not take out these highs and instead goes down now, perfect. It would be even better because you're going to be looking for 100% longs. Now there's no certainty, but very high probabilities that price is going to go back up to take out those highs, which is what we want. If price is going to take out the highs with this move up, got to be more patient for bulls because potentially there's a 5. And then the question is the move down corrective or is it motive? Because you don't know if this wave 5 is going to be a C or a 1. C for the bears, down to 60K. Another 1, positive for the bulls, look for more upside. This can also be a W, but let's not go that way, okay? You're looking for retracement. The retracement decides. Corrective or motive, we'll wait and see. We'll wait and see. And then on the 15, price has been moving up. Yeah, so bullish case, where's the one that oh wait, is it this one? Yeah, so the impulse with the least amount of 4-5 still to go is the one I have on my chart. John posted this in Discord. He's watching as well. What's up, mascarpone? Mascaraton. Put on a mascara ton. Okay. What's up? Welcome. So yeah, here this like I do like to count fewer 1-2s, fewer 4-5s, and then every new range gives you an opportunity to analyze the range. And if the probabilities are really higher that the range is corrective, well, cool, you're looking for price to move up. You know, so I prefer to count fewer 1-2s, fewer 4-5s, and if there's more 4-5s, that's fine, because we'll be able to identify if a range is higher probability corrective or motive, and then you look for up or you look for down. So in this particular case, we would look eventually for 3 to finish, get a 4, get a 5, and that's then the end. The more bullish multi 1-2 is you have many more 4-5s to go. Just take it range by range. At the moment, price is still, you know, like sure, it's now ranging a little bit. So we're definitely looking at this being a wave 4 of something. Take it range by range. You know? But yeah, and the bearish scenario would be a WXY, which is a, can I click on the I? There we go. So that would be ABC, W, X, and then ABC, or maybe B here, 1, 2, 3, 4, 5, and then finish, and then go down. So yeah, the main difference is, though, right? If price creates over here another 4 and a 5 and takes out the high, for a WXY to the upside, you don't want this wave 4 to be too big. While in a multi 1-2 scenario, you want with the fewest wave 4-5s, if we're looking at this wave 4, it needs to match this wave 2. So you want to have quite a decent large 4 in time. So time is going to matter with the ranges that are going to be formed. So yeah, but of course price is pushing. So probabilities are highest as it's an impulse till proven otherwise. But you got to be aware of a WXY because that's your bearish case, short-term bearish, long-term bullish. And a multi 1-2 is short-term bullish, but then quote-unquote long-term bearish because you expect the retracement after finish 5, right, 4-hour time frame, then go down. So yeah, we'll have to observe it range by range. It's not really too useful to jump into incredibly low time frames. Something that I did post in Discord just before I went live is that, well, if there is the potential of counting a 5-wave move down, bulls better just be patient. Like if you want to join the trend and long, even though price is already very high, wait for a new range to form, because a new range will give you all the information that you need to find a new position. But then once a range starts, starts, you can analyze the structures. And if there's the potential of a 5-wave move down, then as a bull, there's no business. Even if price moves up and this happens to be an ABC, okay, fine. But probabilities, well, we can count to 5 here, no? 1, 2, 1, 2, 3, 4, 5, 4, 5. Could this be an ABC? Maybe. But because we can count this as a 5-wave move down, for me, there's no point in longing here. What I would like to see in order to look for something new is I need a 3-wave move down. Not just this. Like this can be counted as a 5. I'm not comfortable to long into a potential 5-wave down on a 1 minute. Even if price moves up and takes out this high, it's bad risk management. It's bad trading in like Elliott Wave terms. One would prefer to miss taking out the high and then wait for the next range. And if the next range is a 3-wave, then look for a move up. Well, that is much better. A good example, actually, of doing this was what I did. Where is it? Here. So price here moved towards the upside, as an example, from 75.6 to 77.9. Now price moved up. And here, you see this range. Wait for a range. Will give you all the information that you need. Now what we can see is we see a 3-wave move down. Is this going to be a 5 or is this a higher probability 3? We take the Fibonacci from the lower high to the low, toggle on the 618, touched. Okay, a wave 4 is invalid. 1, 2, 3, 4, 5 doesn't make any sense. So the probabilities are now, for the bears, a multi 1, 2, 1, 2, 1, 2, 3. For the bulls, ABC. A multi 1, 2 has lower probabilities because your second lower degree wave 1 is very long compared to your first higher degree wave 1. Take a trend-based fib from the start to the end of the higher degree 1 to the end of 2, and you can see it almost touched the 1.618. Not great, because in a multi 1, 2, you like the lower degree wave 1 and 2s to be a little bit smaller, maybe equal, compared to the higher degree. So that is not great, and you could have even used time as well. Maybe let's see. This is 2. Let me do this one. So you could have used even time as well to know that the probabilities are higher for bulls, because after the 2 fib time, price made another high, increasing probabilities that this is corrective and take out the high. So there were multiple reasons to look for price to move up and to long based on a new range. 618 touch, bears multi 1, 2, bulls ABC. Multi 1, 2, lower degree 1, very long. Lowest probabilities. Probabilities are higher, this is an ABC. Meaning probabilities higher to take out the high. And if you're not sure and you're still in doubt with the multi 1, 2, the moment price here made a new high, where this range is over twice the size of this one, really lowest probabilities. You're looking for that high. Right? So now you're not gambling. Now you use your knowledge of Elliott waves with time, with fibs, with structure to look for a new position. Even though price already moved quite a significant amount, you still manage here to catch this move to the upside. And then once things start to slow down, you get out. That was also into resistance. But you want to wait for a new range to form. But this is a very clear 3-wave structure. So therefore, probabilities are high to take out the high. While at the moment, where price is now, I cannot say this is a high probability 3. There's the potential of this being 1, 2, 1, 2, 3, 4, 5, 4, 5. So, yeah. Maybe if price is going to go down, right? Maybe if you create a 5, a 3, a 5, and then price continues the range here, cool, that would be good. It's weekend price action. But I used to have a Dictator. I used to have a Yamaha R6 Limited Rossi edition from 2010. I sold it though. I'm looking for a GS. Now, I love speed. But yeah, now we go into tour. So yeah, this is it. This is your analysis from the weekly to the daily to the 4 hour to the 1 hour to the 15 minute to even the 1 minute time frame. Ta-da. Hopefully you enjoyed it. Let's see what you guys were. Oh, and with regards to levels, let me always show support and resistance levels. With so many problems, how do you trade? Oh, just pick a time frame. Right? Just like so. How do you? So let's talk about how do you trade? Right? How do you trade? Okay, I think that's a good question. No. How do you trade? Well, because the lower time frames make up the probabilities on the higher time frames. No. If price here, if these are your 1-2s and price can manage to create more upside with 4-5s, up here is short territory for potential swings. Because on the 4 hour, this is preferably a wave 5. That wave 5 on the daily is either a wave C or a wave 1, alternatively W. I didn't talk about this, but nonetheless. Which means that you're looking for a retracement. Minimum target, if price were going to go up to the low 80s, would be minimum retracement target would be about the 0.382 at like 75, 74, right? Around 75, let's say. That's a minimum target. Depending on the structure, it may go much deeper, but we can analyze this, but we're already in positions. Minimum time target to hold on to that trade is a 0.382 Fibonacci time taken from the low to wherever the high is formed. Toggle on the 0.382. Doesn't make sense to really get out of that position before the 382. Now, as one then holds on and analyzes this structure, if the structure to the downside is a 5 wave, one can hold on to the short because you expect a 3 and a 5 down. That means this move down is maybe a wave 1 or an A. This is a 2 or a B. This is going to be a 3 or a C. You do not know. Depends on the structure. If this is a 3, well, happy days, down to 60. If this is a C, go back up, right? One can sell here. So you can see like a low time frame analysis can eventually lead to potential swings if there's overlap between the probabilities, like the time frames, basically. Now, locally on the 1 hour time frame, 1 hour, 15, we can say 15. So yesterday in my content, I said the probabilities are highest to take out the high. Minimum is just a larger range, but take out that high because we could not finish something here. Very difficult to finish something here. So it didn't make sense, which means longs are always more interesting. Even if price creates a larger range, you expect price to come back up again. Now, you can at least get out a break even. So with, for example, a bias in mind, and if you don't have a specific entry requirement or whatever, right? If you would purely trade bias, then you're looking for price to at least take out this high and then observe the structure. Price makes a new high. Can I end something here? Yes or no, right? Then you analyze the range. Higher probabilities corrective, 886 touch, corrective movement down. You can manage accordingly. But yeah, you pick the time frames. Like if you trade on the 15 or a 1 hour time frame, then very often it doesn't make sense to hold on too long unless the 4 hour time frame shows you that you are looking for a larger turnaround. So because we see price here slowing down and the probabilities increase for a drop, it means that on the 4 hour time frame, shorts are interesting. But if you can execute a 15-minute short, knowing that on the 4 hour time frame the probabilities are higher for a move down, you might make that 15-minute short into a swing trade. Right? But if you're still in the middle of something and you are looking at a short because the probabilities are highest for a short, which was the case on the 15th, go back to my video on the 15th of April where I explained we're looking for a larger range before upside. Short is interesting. But because you're in the middle of a move and we can't finish something really on the 4 hour, we're looking for price to move up, which means any shorts taken have quicker TPs, tighter management, quicker exits. While if you enter a short where a couple of time frames meet, because their Elliott Wave analysis is looking at finishing a structure at the same place on different time frames, there is the potential to enter, but the low time frame entry becomes a swing. No? And of course, you can just trade the 15 or the 1 hour and not be bothered by other time frames. Like if you are a swing trader, you don't really care about the 15 and the 1 hour and that stuff. It's not interesting to you. But if you are a low time frame trader, 15-minute, 1 hour time frame, well then in this particular time frame, this is where you're active, and it's just about trying to get your little piece out of the market and just go in and out and in and out. It's not about scoring the runners, right? It's not about trying to get the whole move. It's about getting your piece, right? Your R, 2R, 3R, 4R, and be happy and get out. It's not about getting the 1 to 10, 1 to 20, 1 to 100, make a P&L photo and share it somewhere because I want to boost my ego and people need to congratulate me for my $1 position. Like, you know, that's not interesting. Try to take your piece of the market, trade safe, good risk management, take your profits accordingly, and then just look for a new opportunity. But if you do multi-time frame analysis and you see multiple like time frames add up into one area, there might be the potential for a swing with a low time frame entry, which can mean a large risk to reward ratio. Right? Yeah, but for the most part, if you're active on the 15, just be on the 15. It doesn't really make much sense to look for a large swing trade by trading the 15-minute time frame. For example, here, this was an amazing long, right? This over here, we had the order block support. Price is slowing down, decreasing volume into support here, right? Very, very nice. Price moves up. But are we looking at something must finish here? Right? Like, it depends on the move up, but then you get a 3 wave. This is either A, B, C or 1, 2, 3, 4, 5, which means 3/C is always a good TP area. It's not like I'm longing here, so you must look for the high. Nah, like in this you're just aiming for just tighter management. So quicker TPs as price moves up, and then just get out of your position, make like 2R, right, 3R, and go to the next one. Because bottom line, what's a lot more important is consistency. Sure, having the occasional big winner will happen, right? It will happen, but it's the occasional big winner. It's not the standard. It's not like every trade must be the big winner. It's about consistency. And then sometimes you'll have big winners, as long as you don't have big losers. So, okay. Oh yeah, so I'll have a short look at ETH. Elliott Wave is crazy. It is. It is simply lovely though. It is very nice. Oops. It really gives you guidance in how to read, or it gives you guidance on bias. What's the bias? What's the highest probability direction for price to go to? And then one can look for opportunities in that direction. Yes, that's correct. That's correct. Wait. It's nice, eh? Can't say where I got it though. Do both swings and scalps. Yeah, it's nice combination. Why not? Like generally though, if you do swings and scalps, I generally recommend to have different accounts and not do that on like one account. Like some like to do spot swing and then scalp or day trade on the same account. I generally recommend to separate those because it's very like if you're doing day trading, especially with trading psychology, things can become messy. Right? If you're losing in day trading, you're like, oh, let me just take a little bit of my swing spot out for a little bit more budget in, you know, it can get very messy. So I got the long position 75.7, 75.7. Okay, where should I move the stop loss to fight for a TP opportunity of 81K? Well, first of all, Sasaki, well done, right? You're in profit. Followed your plan, followed your strategy, and you're in profit. My question to you would be, did you already take some profit, or are you still in the full position, right? So, of course, I don't know how much you're in profit. Is it 1? Is it 0.5? Is it 2? Is it 3? Is it 5? Is it 10? Right? R means how much did you risk and how much multiple are you in profit of that risk. But yeah, at the moment, right, this looks motive. What you don't want to see as a bull is the 618 to be touched, to invalidate wave 4. So that is an invalidation. Now, this here could be your first little wave 3. So if we follow this, then your 618 is rather low. Like, the issue is, the price actually has to move up further in order to, for you to, how can I say, like, the invalidation of an impulse is below your entry at the moment. So it doesn't really make sense to wait for that to be hit. The reason why I ask for you, like, did you already take some profit at least, is because if you are in profit and price moves up and it moves into resistances, like the order block, right? And we have an understanding of a potential bearish scenario, always important. It doesn't mean you should close. Plus on a 1 minute time frame, yeah, maybe there's the potential for a 5 down. Like, I'm not a financial advisor. I don't care what you do with your position. But what I like to do in my personal trading is I like to just take some profit as price is moving along. And of course, you don't want to take too much. But the problem with greed, which is trading psychology, is that imagine you take some TP here and price continues. What are you going to feel? Are you going to be pissed? Are you going to be angry? Are you going to be annoyed? Are you going to be disappointed that you took something off? Or are you like, I'm happy, I'm satisfied, I'm good, I'm proud? Because in my opinion, it makes a lot more sense to TP along the way instead of trying to maximize a move, because you do not know how far price may go. Now we have an invalidation, but the invalidation of the impulse up is below your entry at the moment. So of course it doesn't really make a lot of sense to move the stop up because it's still going to be a loss. Well, you can put it at break even, I suppose, but even break even would not be satisfied. You won't be satisfied. So I personally like to TP as price moves and then manage accordingly. Just like you always have something running. And just manage accordingly, wait for new ranges to form and analyze those ranges. But another question would be, what was your plan entering? Did you have multiple TPs? Where was your stop loss? What's your risk-reward ratio? How much TP do you take at every TP? There's a couple of questions. You need a plan. Before entering, you need an idea of what you're going to do or how you're going to manage it. And if you don't have a clear idea of what to do, then officially it should not be an entry. So maybe you're hearing the baby on the background, by the way. Our baby she's vocal. She knows what she wants. Probably getting food soon, by the way, 6:30 now. She's not crying. She's just like enjoying herself. My first TP is at 87.89. Yeah, if that's part of your plan, it's good. And then if price reverses and goes to your entry, then you should have that in your plan. And if price continues and goes to TP, should be part of the plan. Right? If price goes to 85 and it reverses back to entry, part of the plan. Right? As long as it is part of the plan, it's all good. Right? As long as it must be part of the plan. So, and everyone has a different style. Some people like to just enter, set TP, set stop loss, and then set and forget. While others will TP as price goes. Other people keep adding as price goes. Right? There's many different styles. Doesn't really matter who you are. Yeah, so trend-based, on the daily, it doesn't really, like, only maybe for the bears, the trend-based fibs really matter, but the retracement fibs are at the moment more interesting. Let's have a quick look at ETH. I haven't looked at ETH for a very long time, so a couple of questions about it. What's happening here? Remove the red names. A lot in the green today. Ethereum. There we go. So what's going on here? Oops. Ah. Yeah, so the bulls definitely don't want the low to be taken again. Otherwise, you're going to visit the 886. You don't want that. 1 second. WX, ABCY. 1, 2, 1, 2, 3, 4, 5, 4. Maybe one more. Just I haven't checked ETH in a very long time, so I just need to quickly update if there is a multi-1-2 locally. Maybe 1, 2, 3, 4, and 5. 1, 2, 3, 4, and 5. 6, 1, 8 from here to here. Invalidation. Common targets. This is important for the bulls. 236 was quite nicely respected. Wave 4 of a lower degree tends to be a target for wave 4 of a higher degree. Price is en route but hasn't reached it yet. Would be 2600. Maybe you still get your wave 5. There we go. That's for the bears. Invalidation of an impulse down or something finished would be 3.2k. If price is reaching 3.2k, that's great for bulls. Okay, so let's move this in here. Something finished. Let's put the same 618 on the chart. WX, but if this is WXY, yeah, but then you go to the 886. So I'm going to remove this, not as relevant. So yeah, the bullish scenario is you have a finished WXY correction, which is what we were looking for. Well, it must be over a year ago, no? 2024 even, I think. So we had the WXY on the chart. You have to go back to early ETH analysis. Potential 1, 2, preferably finished. Yeah. What is this structure if finished? Well, it must be a zigzag family structure, no? So WXY or some zigzag family. Low time frame stuff, not really bothered by the low time frame. I think what's most important on ETH is the 3200 level. If you touch 3.2k, you invalidate an unfinished impulse for possibly a flat. And it increases the probabilities to take out all-time high. Doesn't mean you go up in a straight line. People sometimes forget things take time. I'm on a weekly time frame as well. Plus, wave Y can be a flat, can also be a triangle. A, B, C, D, E, and then you go. Okay, so and then ETH goes sideways till like 2027, and you still get the memes of like, oh, ETH is at 2300 in July 2027, and it was also at 2300 in April 2021. You know, you see those memes everywhere. It's quite funny. It's true. It's been you know, for the holders of ETH, amazing gains. No, absolutely beautiful. So yeah, 3,200, very interesting. If touched, probabilities are high to take out the all-time high. If price comes down one more time, that would be long territory. Ideally, price is then moving below 1,300, honestly, because that's your preferred flat C target, is taking out the low of A. But if price is going to move below 1,700, then yeah, anything down here would be long territory. You just want to wait for a 5-wave structure to finish, and then likely you finish something here. So ideally, execution-wise, I would be like, well, if 3,200 is touched, one generally doesn't expect a straight line up. So especially with the resistance here, I would like a touch and then maybe a retracement, and the retracement provides the opportunity. Or you get the triangle, ABC, ABC, but then one can join here or join there. It's just that once this is touched and the probabilities are higher to take out the high, longs become interesting. And if price is going to go down, longs become interesting. And locally, one has to analyze this corrective or motive to see, you know, are you going to, is something finished at the low, or do you get an impulse down? Oh, I could see another 4 or 5 here. 1, 2, 1. Sorry. 1, 2, 1, 2, 3, 4, 5. Maybe another 4, another 5. Could maybe be some ABC, whatever. Don't want to really count in detail. But on the weekly, you get what I'm looking for. So maybe there's some sort of diagonal. Not sure if it works. 3-wave move down. So bears could also look WX, ABC, wave Y, and then go down. Bulls want to see some multi 1-2 stuff. But that's low time frame, right? So, yeah, well, I'm on the daily. Someone said something about gold. Mm-hmm. Okay. 1, 2, 1, 2, 1, 2, 1, 2, 1, 2, 1, 3, 4, 5, 4. This would be very short. If this is a wave 4 matching this 2, that's one tiny 4. It looks more like a 3-wave move down. Very, very, very short. Actually, this move down looks more like a 3 than a 5. Which actually is bullish. Okay, well, preferably this move down is corrected by this. And this is the end of your correction of the move down, and not this whole thing being part of a correction of this structure. What I'm trying to say is I would not look for a flat here. Like this is an A01, A, B, C running flat and then go down again, because it's such a long structure. Very, very long. I would prefer this than just being a 3, and either get a larger corrective structure. Like the thing is, this is a high probability 3-wave structure, which in the end is bullish, but you can still get larger corrective movements, sideways or sharp. With the bearish case being A or 1, 2 or B, 3 or C, with a flat in the middle. It's just that the flat is so huge compared to your 1 or A in time that ratio-wise, it makes more sense to say, well, this looks at the moment like a 3. Internally, this counts like a 3. Alternatively, this would be an impulse. 1, 2, 3, 4, 5. So, yeah, I mean, it was time for a retracement on gold, I suppose. Can't just keep going up forever. But actually, on the weekly time frame or the monthly, I was still looking for higher. Which count? A year, monthly? 1, 2, 3, 4, 5, and then still another 4, 5. Bearish case. 1, 2. Bullish still proven otherwise, really, because of the push. Well, I haven't looked at this for such a long time as well. 1, 2, 1, 2. I don't know the detail here. But if this is a multi 1, 2, then you don't have the force yet, so you still need 4, 5s. Now, extended 5s are more common on commodities on higher time frames. So absolutely possibility. We're looking at a 5, 1, 2, 3, 4, extended 5, very normal. I actually do like to count this as 1, 2, 3, 4, and then 5, because we already have acceleration here and a gap between this range and this one. Sure, it can be a multi 1, 2, but it looks good as just a 1, 2, 3, 4, and then you have the extended 5. Pull a little extension here. Yeah, 1.618, which is here, is also a target for an extended 5. So that's quite interesting. So, yeah. I mean, you can count an impulse down here. So you got to be aware of this being an impulse. But if this is a 5, it needs a partner leg. And if this is a 3, it's not the partner leg. Like this needs to be a 5 in order to be bullish and counted as an A, B, and a C. Bears, multi 1, 2. So, yeah. What's the chance of a multi 1, 2 here? Shorter. One-to-one. It's a possibility. What bulls like to see is that take out this high, just to lower the probabilities of a bearish. What am I doing here? Bearish outcome. Yeah. So what the bulls want to see is this high to be taken. 4,900. If you take out 4,900. Probabilities are low for a multi 1, 2 because your lower degree 2 is probably going to be about twice the size of your higher degree 2. By all means, it's going to be longer because it's already past the 1 to 1. So if that happens, then the probabilities are higher for either this is an ABC down, you look for price to take out that high, right? Or you just get a larger corrective structure. More sideways, or you have like A and like A, B, and then a C, and then you go up. It's just that if a multi 1, 2 is low probabilities, your highest probability is corrective. Highest probabilities take the high. You go down, you look for up. You go up, you go up. Right? It's just the bias. The bias is the context would be looking for up. So to be more safe on gold, ideally it first moves up to 4,900 before really having the interest of looking for price to take out the high. Just to be safe, basically. And then it can still create larger corrective structures. That's fine. Right? This can be like W, X, and like A, B, and C, whatever. W, X, and a Y, sideways structures, all that stuff. That's for later. don't want to go in detail, put everything on my chart here, but it's just that if you take out 4,900, you're going to be looking for that high sooner or later. If you go down first, cool, better buying opportunity. Is a diagonal still an option here? Yeah, so probably if you take out 4,900, you also invalidate a contracting diagonal, which is even nicer. You move up, touch the channel, invalidating a contracting diagonal. Yeah, it's just if you move above 4,900, it's very high probabilities that sooner or later you take out 5.6K. And it's perfectly fine to continue a range, take out the low, blah, 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 but you are looking for that high. It can go straight up as well. That depends on the structures. Now, I could put an alarm here. Let's just put an alarm on it. And if it goes off, we can cover it in a live stream. Why are you all bullish at resistance? Without looking at Elliott waves, I can guess the correct this. Oh, okay. Why? Not sure what you are talking about, but no one is bullish at resistance unless the chart tells us that upside is still a possibility. Okay. Can you? Yeah. What? How long are we in? 1 hour 25 minutes. Mamba, I think it is a very good idea for you to just be quiet, stick with your own position, your own strategy, and there is absolutely no need to try and convince others to do what they have to do. So, very simple, right? And if you feel the need to do like, say this type of stuff, you're at the wrong place, mate. It's probably better you go. Pleasure serving crypto. Everyone will have their own plan. Besides the fact that you probably have not even seen my analysis that I did in the first hour. The Elliott Wave analysis on the weekly, the daily, the 4 hour, the 1 hour, the 15 minute, and the 1 minute time frame. So you have absolutely no idea if we are bullish at resistance or if we're bearish at resistance, on what time frames, what the targets are, what we're looking for, how one can trade it, which I covered as well. So, I feel a lot of bullshit being typed on a keyboard. So, do you have your exactly how to enter a trading Elliott Wave pattern based on or other way? I explained it a little bit earlier. Like I have videos on how to trade Elliott waves. I think that would be your first place before I cover everything in detail, because I have videos of close to an hour on how to approach this, which is I have a couple in this playlist here. This is my educational, like the beginner guide playlist. And then you scroll down in the playlist. And then at the bottom, I have like how I trade Bitcoin with Elliott waves, how to trade Elliott waves, 2 videos. So you can basically go there and then you'll probably get what you're looking for on how to trade Elliott waves. If you want to keep it simple though, then I would recommend to just focus purely on impulses, because every corrective structure, as well as motive structure, starts and ends with an impulse, always. Every corrective and motive wave starts and ends with an impulse. So if you can learn to recognize impulses very well, you're going to be good for 80% of the time. Like you can just trade impulses. The end of an impulse, the start of an impulse, you just trade an impulse. So I think that would be the quickest way for you to learn how to trade Elliott waves, is to focus on an impulse. Understand the characteristics, understand the general structure, understand the volume pattern. I think that would be a great place to start. But I have a couple of stuff in the beginner section. What starts with 5 ends with 5. Just simply finding 5. Yeah, exactly. Like even if you look at a triangle starts with a 5-wave structure, because wave A in a triangle is most commonly a zigzag, and a zigzag starts with a five-way structure. A WXY starts with a corrective structure being a flat or a zigzag. And both of those, in the end, start with a lower time frame five-way structure. So it's like every pattern starts and ends with an impulse. So if you can focus on trading an impulse and recognize where it ends or starts and stuff, you're going to be you'll have a great foundation. Starts with like on the chart, every structure you see starts and ends with an impulse. Impulse to the upside here. We have a corrective structure, but it just depends on the degree. So, for example, right? For example, I can draw them all on the chart. We have ABC zigzag, right? We can also, of course, have a W, X, and a Y, and even another X and a Z. We have the flats. We have the triangles. We have the impulses. We even have WXYs. And a WXY would, for example, be a zigzag, X, and then a flat. There we go. Every structure you see, plus all the variations, will always start and end with an impulse. Because, let's go through it. The zigzag, A, B, C. Wave A must be 5. Wave C must be 5. WXY, XZ. Wave A of W is an impulse. Wave C of Z is an impulse. A flat structure. Wave A can be any corrective structure except a triangle. Most commonly, it's a zigzag, alternatively a flat. Can even be a sideways WXY, but not very common. But the first wave down here is an impulse. If it's a zigzag ABC, it's an impulse. If it's internally a flat ABC, then wave A must be zigzag again, or flat, or WXY. It all starts with an impulse. Wave C is an impulse as well. I just removed my WXY. Then we have an impulse, always starts with, I should say motive wave, by the way. So motive wave, not always an impulse, but a motive wave. But an impulse is more easy to recognize than a diagonal. Let's be fair. So, of course, a motive wave up, like an impulse, starts with 5 and ends with 5. A triangle, wave A, zigzag. Zigzag, ABC, A is a 5, C is a 5. Wave E, at the end of the structure, zigzag, E is a 5. WXY, for example, zigzag, flat, with a zigzag in the middle, right? Then you have impulse to begin with, and wave C is an impulse to end. So it doesn't really matter what structure you're looking for. People get chopped up trying to figure out the exact detail of the structure. And I think if you this is beginner Elliott Wave trading, really. If you can focus on an impulse, you will probably be able to trade 80% of Elliott Waves. The other 20% is trying to figure out the detail of what exact structure you're looking at. But if you purely focus on impulses, you'll be very good. You know, KISS, keep it simple. And what I have done in my own theory, which we call Kuhn's theory, for the lack of a better name, is simplifying reading the chart with different theories, and one of them is trend and turn. And to keep it incredibly simple, it's not impulse related, by the way. You can use this in corrective structures as well. But generally, what you're looking for is overlap, a sharp move, an overlap. We want to see an S-shaped structure. We want to see decreasing volume with a couple more highs into resistance. Or sometimes the overlap at the beginning is not even there, and you just get this. And this, for example, is what you got. What did I just show you? Oh, here. Right? Price, steep move up, slows down, decreasing volume, overlap returning into resistance that we had there as well. Like, very nice, right? You can see here, volume decreasing. So you don't need to know how many 1-2s, how many 4-5s, how many, that's the detail of Elliott Waves. Elliott Waves is about the detail. And with Kuhn's theory, I basically simplify stuff. It's not Elliott Waves, because I don't want to hurt the Elliott Waves brand. So I'm not like someone that says that everything is ABC, 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 and internal ABC into ABC, and then say, oh, this is the new Elliott Waves. Elliott Waves is outdated. Only to realize, hopefully one day, that the analyst is not using Elliott Waves. It's just mistakes. Anyway, so yeah, we gave it a different name, and just like focus on impulses. Yo, what's up, 876 trader? Can the move down be a diagonal and the current move up is a sharp wave too? It's too early really to cover diagonals. It's possible if this would be WXY and price would fall 1, 2, 3, 4, 5, like 1, 2, 3, 4, 5, but it's too early. You only really want to focus on a diagonal and give it some probabilities once you finish a 4 and move down for your 5. That's where it becomes relevant. This is at the moment not relevant. You have we have the membership. So Discord is free, right? Like, check it out. It's a great group of people, very active, lots of great analysts, great chatting, no P&L screenshots. We don't do that bullshit. It's really focused on education, sharing. It's really fun. And I have 2 memberships, Entry and Elite, and you'll find, like, there's a link in the description. So you can check it out. If you have any questions, you can always write me. But I think the step 1 would be check out the Discord. It's free, it's fun, and you might find what you need. The KISS, keep it simple, stupid method is best in Elliott Wave. Seeing everything through the lens of 3-ways and 5-way motions transform my trading. Thanks for all the bump education. Cheers, Surfing Crypto. By the way, you have your own like YouTube channel. You do Elliott Wave analysis, no? 471 subbies. Good stuff. 10 days. Oh, 10 days ago. Hey, Surfing Crypto. Hey, gotta pick it up, man. What's that? Dude, I need another video. At least one a week. You're almost at 500 subscribers, eh? Almost 500, man. It's good stuff. Everyone starts somewhere, no? 2021, 112 videos. Right? Keep it up. Right? Subscribers will come. They will come. One second. Now you
when we zoom in on Bitcoin, we notice that there was a potential 5-wave motion towards the upside and a leading diagonal.
You got a good voice, right? Like you have a good voice, right?
After the leading diagonal was done being formed, we notice that the low comes in before the 382 in time. Because of that, we see this move up just as a correction and a potential which lies on Bitcoin.
Mentioning the 382 FIP time, I like it.
25,692. That upside is still in the cards. So stay tuned, guys. Again, fast, quick update. If you're enjoying,
good stuff. Let's subscribe. I'm supporting you. Hey, you got one more. Now you got 2 more subscribers. Just keep up the work, right? Keep it up. Keep posting. Like, subscribers will come. Like, and if you just share for the fun and not for the numbers, it will go even quicker. Like when I started my YouTube channel, mate, I just did it for the fun and giggles, because in a YouTube in a Discord community, people were asking like, yo, can you make a video about what the hell you're sharing? Because I have no idea, but it looks interesting. That's where I started. And now we're here. But in the beginning, I was creating non-stop videos all the time. So, and it's good. You got a good voice, right? You got a good voice to present in content. It's nice to listen to, right? It's a good pronunciation, good voice. So keep it up. It's very good. I like you mentioned the 382 as well. Diagonal from the high, the wave 1. Yeah. But the diagonal is it. Oh, you mean on the low time frame, 876 trader? Or do you mean here? Because a diagonal here also would be too early if this is like, unless it's, you maybe look for 1, 2, 1, 2. But I'm not really looking at like diagonals are not your most common structure, so I wouldn't prioritize looking at diags. Generally, I look at other things first before going into diagonals. Yeah, I will not look into other coins at the moment and stuff because I'm planning to go soon. It's my wife's birthday actually, and yeah. So and it's almost 7 p.m. and for her birthday we're gonna do some stuff tonight. So how you? Oh, so I got into Elliott Waves. This I'll keep it short with the story yapping here, but I was a host on television on Fox Sports in the Netherlands. My previous career was in esports and still partly is sometimes, but and I did many different things in esports, presenting on TV, global keynote speaking, helping parents with gaming children. I was an professional esports player and more stuff. So I was on TV as a host, and then the director of the show asked me to be the presenter of a crypto show. Now, I didn't know anything about crypto, didn't know anything about finance. So he asked me to do that in November 2020. Yes, or December, either or. And then I told him like, yo, I'm happy to do it, but I need 2 months to prepare. So come January, I figured out stuff about the crypto markets. I saw the charts and I kind of got into the charts. I didn't know about Elliott Waves. And then I was talking to Beerabit. I met Beerabit in in like a community somewhere random in Discord. And we started talking and vibing. And Beerabit is still, many years later, by the way, Beerabit is still part, like here he is. He has his own channels now. Right, we are still connected. Like it's really, really, really cool. He is the first person in this industry that I spoke to, and here we are. So yeah, we got in touch with one another, and then he shared an Elliott Wave count, and I didn't know what I was looking at, but it kind of played out, and I was like, "Yo, this looks very interesting. What is it?" And he said, "Well, this is Elliott Waves." I'm like, "What is Elliott Waves?" And Beerabit doesn't know what Elliott Waves is. He's not an Elliott Wave, like he knows what it is, but he's not like an analyst in Elliott Wave. So he was like, yeah, just check it out. And I was sold from that moment onwards, except for 2 months in my first year, because in my first year, towards the end of the year, the end of 2021, I actually quit studying Elliott Waves for 2 months because I got so pissed because I didn't get it. I just did not understand. It didn't, like my brain could not comprehend the different scenarios, the fibs, and all the stuff that comes with Elliott Waves. I felt like I made no progress. So I quit for 2 months. But in those 2 months, looking at the chart, my brain was still counting. Like even if once you start with Elliott Waves, you will not get rid of Elliott Waves. It will be with you for the rest of your career. Like every chart you open, your brain is like 1, 2, 3, 4, 5, ABC, maybe WXY. Like it just does it. And then I was like, let's get back into it. And then I kept studying, kept improving, actually felt progress. And yeah, so here we are. So yeah, that's how it went. I always say like I don't know who's a great Elliott Wave analyst in the chat here and who's not. I mean, some of you I know, right, because of Discord. But if you are in the beginning phases or you don't get it or you feel frustrated, keep it up. Just keep going. Don't stop for 2 months like I did. Just keep going. But what I would recommend is join the community in Discord and talk to people, because you'll learn a lot more in a shorter period of time and make more progress by chatting with others that are doing the same thing. And I was by myself. I did everything by myself. So I'm 33. 33. Well, so yeah, but yeah, so the time frame you are on, wave 4 would be an expanded flat in the leading down. Expanded flat is not allowed in wave 2, 4, or 1, 2, 3 in a diagonal though. They all have to be zigzag family structures, or wave 1, 3, 5 have to be an impulse. Yeah. Esports player to trader, yeah, yeah, true. If you look for my name, so Koens Trading, Koens was my esports name. If you look for Koens Trackmania, you'll find lots of stuff, interviews, news, newspapers, YouTube videos. I even got another YouTube channel, which is very small, by the way. I wasn't really very good in content creation in my esports days. Who study you? I learned Elliott Waves by myself. What I used is a website that I always recommend, which is in the description. You go description, click on the link tree link, and then it says Elliott Wave website. And it refers you to a website, which I think is pretty good. It's about 90% correct, but it misses a couple of things. But it's a great place to start. Then you have my beginner playlist on YouTube. And I guess just generally, Elliott Wave Principle is good. The problem with the book, so I think it's a great book to have and to read, but it won't give you a great amount of detail on the structures and the targets and that type of stuff. But if you wait for my compendium, which is coming out, hopefully Q2, if not Q3, like, damn, it's taking so much longer, then you will have everything you need. Elliott, yeah. You come to esports event this year? No, I don't really have an esports event planned, to be honest. I kind of slowly moved out of the industry. I still follow it, mainly Trackmania, because that was my specialty. But yeah, I don't have anything planned at the moment. Elliott Waves gives you a headache. Oh yeah, sometimes it does. If you're not able to keep track, I use Wyckoff with Elliott Wave. It makes it simpler, but you're 100% right. When you see a chart, 5 and 3 is all you see. Yeah, yeah, and absolutely. Like, damn, man, Elliott Waves can give you a headache 100%, especially if things are just very complex and annoying. And it can give you a headache, like, for sure. It's not an easy theory, right? Elliott Waves is difficult, which is why most people don't go into Elliott Waves. But it is so beneficial. It's such an amazing tool to have in your toolbox. Right? It's so nice to be able to open a chart and read the price action like a bit of a book, like understand where are we and what can we expect. Instead of moves feeling random, it becomes part of structures. And I don't know, I really enjoyed it. I like structure. Also in my life, I like structure. So yeah, you look like a Warzone player. I've played a lot of Call of Duty though, but that's the old school Call of Duty Modern Warfare 2. Old school, not the new, not the recent ones. Old stuff. How do I get my signed copy? Serve and crypto. It only the limited editions will be signed. We have 3 limited editions packages that will be online at some point, and all of them will be signed. The regular books printed by Amazon will not have signatures, only the limited ones. And Bundle A has, how many did we do? Bundle A, I think, has 100 books. B has 50 books, I believe, and the most limited extreme version is 15 copies, I believe we had there. I think 15 it was. Very, very, very limited. But the limited edition books are printed by the Rolls-Royce in the printing industry, so it's very high quality. Amazon is like a normal book. It's just normal. But the limited ones, I can't wait to have those in my hands. Like it's super premium. It's very expensive, but it's very nice. That's why they're limited. It's for the people that don't just want a book and theory. It's for the people that want like a unique piece. Besides the fact that Robert Prechter, author of this legendary book and the founder of Elliott Wave International, also for the first time ever in his lifetime gave a cover quote for a book, which is my book. So he is a big fan of what we have created. We are allowed to use his quote in marketing, on the cover of the book, in the book, like everywhere. He's very excited. And in the end, what we created should become a pack deal basically with Elliott Wave Principle. Like you have this book, right? General story of Elliott Waves and like where do things come from and Fibonacci and stuff. And then you have the compendium, which is basically like full-on theory, like pure theory, not all the text. And it's a compendium. It's not a book. A compendium is a different type of book. Compendiums tend to be more expensive, and they are more expensive compared to regular books. You'll have to Google a little bit or ChatGPT or whatever AI to know the differences between book and compendium. But we create a compendium, an Elliott Wave compendium. So yeah. Yeah, the Warzone player makes me chuckle though. I mean, I was pretty decent in Call of Duty, far from pro, but in just public lobbies, we did pretty well. Yeah. Elliott Wave has helped my trading immensely. Yo, Divinewood, how you doing, man? Divinewood, everyone also has a YouTube channel in Elliott Waves, but it's not this one. He has Divinewood Trading, I believe it's called. No excuses. Wait, I'm actually, let me do this. No excuses. Hi, Koens. Your take on Elliott Waves is super inspiring and well explained. Thank you. I appreciate it. I'm an order flow trader and still a beginner with Elliott Waves. Those corrective combinations definitely, yeah. I mean, you probably started with the impulses. I do think order flow is a very nice addition to Elliott Wave, or in your case, Elliott Waves is a nice addition to order flow analysis, because once you start, like for example here, I don't use order flows, I don't know. But if a structure, like if we focus on impulses, then probably towards the end of motive waves, right, you will probably be able in the order flow to see certain divergences, or you'll see absorption or those type of stuff, which makes it, if you can combine Elliott Waves with order flow and you are able to execute towards the end of an impulse, or maybe the beginning, it gives you a bit more confidence to hold. And if you can then see in the order flow that buyers, aggressive buyers or whatever, I don't really know order flow, but if that's coming in, like you can have great, very accurate entries. But corrections are difficult. Yeah, that's why I simplify it earlier in the live stream by saying like every structure in Elliott Waves, corrective or motive, starts with motive and ends with motive, where an impulse is most common. So starts, ends with an impulse, most common. So if you can recognize an impulse, you'll do very good. What is the pricing? I truly want the limited time edition. I know I will use it every day. So we have, I don't know if I have the... Ooh, I do actually have some of the goodies in the closet behind me. But yeah, I can't I can't show it. We haven't yet like put a price on the limited editions. Like a hard thing. We have done a lot of market research on compendiums in different industries, medicine, IT, AI, those type of things, to get a feel of the pricing. Because again, it's not a book, it's a compendium, it's a different market. And I think at the moment, we are with the ebook, I believe we're sitting at about like 49 or 50. Like this is not yet confirmed, right? Paperback 97, hardcover 197, limited. I don't know what the limiteds were. I think the most limited is only 15 pieces. Is that by far most expensive because of the goodies that are involved and the extreme quality and different things. So that package is quite insane, which will be, I don't know, maybe a couple of €1,000 easy, because of the printing cost alone of the limited editions is absolutely crazy. But that's the quality. It's not for everyone. Most people will just buy a normal book, which is fine. But then the cheaper limited edition, I think the first one might be about, I don't know, this again, I don't know the exact numbers, but it's around like 3 or 4 100. The second one might be around 1,000, and the most expensive 5K or 4K. Again, it's not for everyone, right? So yeah, but that's at the moment the compendium. That's like the idea, like 50, 100, one like 200, and then it's like 300 or 400, about 1,000 or 1,500, and then like 5K. But then you go up. That's again not for everyone. It's incredibly limited, and just depends on what people look for. But we have limited bundles for the ones that want something very unique in the Elliott Wave history, basically the history of Elliott Waves, supported by Prechter, which is cool. So yeah. So, and then you'll see that the regular books are not the limited editions, but the regular books are priced similar to industry standard compendiums in other like industries, right? When you look at other industries and other compendiums and other compendium books, right? High end. High expertise, you're going to be around that same price. It's like buying medicine books. I mean, my books, when I studied medicine, my books are more expensive than my compendium. I had to buy, well, my parents, thank you to my parents, Sophie and good. My parents bought my medical books, and some books that they had to buy were 997 euros, and that's a regular book. It's not a limited edition. It's a normal book. And it's not just your one book, because you need to buy 15 books. Now, luckily, some books are $50, but some are hundreds of euros, which is insane. So we're luckily definitely below some of those pieces, but we're industry average, I suppose, with compendium sitting with ebook 50, hardcover 197 or 200 or something like that. And then the paperback around 97-ish. It's about industry standard. And then the limiteds, they go up because of also the goodies and stuff that are involved, which I can't talk about just yet. Yeah, and the printing, because it's the Rolls Royce. You know. So yes, exactly. Blue Perspective. Yeah, they're so expensive. Dude. Like and as you know as well, Blue Perspective, like it's not just one book, right? Like medical school. You how many do you need to buy? I had like 15 or something, 17 books. And the problem as well is that every year you need to buy certain new books because of the medical industry getting innovated so quickly. Things change and you are kind of like required to buy a new book. So it's not like you buy a book and you're going to be good for the rest of your study period. You know, you just buy new books every year. Yeah. And some of those books are really expensive. But then again, I suppose the reason they are so expensive is because of the amount of research, knowledge, expertise, sources, time that goes into creating the book. It's not just the book and the printing, of course. It's the amount of work to get to even making a book like that, which also includes a lot of scientific research, human body research, you call it. You know, yeah, like. But then again, for my parents, me studying medicine, yeah, and of course I support myself as well, but they supported me in my studies, and it's expensive. What's the difference between your memberships? Do they help speed up the learning process, or what would you recommend? Well, step one would be to just join the Discord community and be part of. I probably have to make a video about the memberships, and then I can just refer people to the video. But Discord is free, is fun. Entry membership is where I give updates during the day. Plus, I make a whole summary in the morning of the different Elliott Wave scenarios and the bias of that day, like the directional bias, the highest probability scenario, what we're looking for, basically. So every morning, also during the weekend, and most of the time when I'm on holidays, I will do that update, and I will write everything with photos, and I write in the photo plus additional text, and you know, let me just show you. It's probably better if I show it. Both in Discord and Telegram. So here, this was yesterday. Yesterday I did some lots of updates. This was a short one in the morning, but let's see if I can find yesterday. Yesterday was a busy day. Oh yeah, here I explained about, I got a message about how one can trade the price action of that day. So I explained about how one can trade it. So every morning I do stuff like this. Sometimes it's a few photos, sometimes a lot. And then during the day, whenever there's stuff happening, I'm like updating, there's news, new scenarios, improved directional bias, whatever. So that's like entry. And then in Elite, we have like our separate lounge so people can chat. But every morning I also make a morning routine. So basically I show like entry is where that's conclusive, but my morning routines is where I answer questions. I do my whole analysis basically. So in the morning, when I open my chart, I put the levels on my chart, I update my waves, I explain what I'm looking for. I always have an opportunity section so that at the end of the video, I say, well, based on the Elliott Wave analysis that we've done, based on the areas of support and resistance, these are the zones that I find interesting. If price approaches this zone in this and that way, there might be an opportunity there. So I kind of explain. Not only do I show like how to do Elliott Wave analysis and the thought process and the reason behind certain counts and why I do this and that, I also show how to then transition into, well, for opportunities, I'm looking for this and this area, and what I want to see is this and that. And if I see that, then of course, maybe there's an opportunity, but everyone in the end needs their own plan. So not like signaling. Now, then in Elite, we also have channels where I answer questions, strategy, how to create your own strategy. We have, where's the YouTube playlists with a lot of additional content. It all sits in there. Yeah, a lot of people, when we look at memberships, most of the people that enter Elite stay there for a very long time. The churn is very low. Because every day with the morning routines, plus I'm very active in the lounge, a lot of educational material. Yeah. So yeah. Are you? No, I'm not going to be in Dubai anytime soon, to be honest. Yeah. Also, the crypto event was cancelled now. In a retracement, when do you start labeling a triangle? After the fourth leg, like wave D. So, triangle as a bio. Well, a triangle only really becomes interesting in general, unrelated to where it sits in a bigger structure. A triangle can sit in a wave 4, a wave B, a wave X, a wave Y, a wave Z. Doesn't really matter where it sits. You generally only really want to move into triangles as an option once your fourth wave is finished and you're moving into your 5, meaning your wave D is finished and you're looking for E. Before wave D is finished, other structures generally have higher probabilities. I don't do signals, no. And the reason for that is I really dislike that signals is a part of this industry. Like for me, if someone does not, maybe I'm too classic, old school, but in my opinion, if someone does not want to put in the time and effort to create a strategy, learn about how to apply it, and put time into this, it's not for you. And then I think it's better to oh shit, it's still here. Oh shit, sorry, lol. I was in my wrong window. I completely missed it. Good that you tell me. Sorry for that. So here you can see the elite channels. Sorry, lol. I didn't. So here you can see the like updates where I write like the whole like every day, and I make like summary posts, morning updates with photos and conclusions and general recommendations. Here's the lounge, morning routine, all sorts of other channels. These are the public channels down here. So, lots going on. And Yeah, sorry. I forgot that I have two different, you see, two different windows. Yeah, sorry for that. But yeah, I don't do signals. I think if someone is not willing to put in the time and the effort, then they should probably just invest and not be bothered with trading. Yeah, maybe I'm too classic, but and I'm also not comfortable knowing that I am kind of like feeling responsible of someone else's money. You know what I mean? Like I'm happy to do my own money. Like I earn it, I spend it, I lose it, I win it. But if I trade and I know exactly what I am looking for, I know my strategy in and out, I know how to manage it, it fits my personality. If I would do signals, the person on the other side doesn't know the strategy in and out, doesn't have the experience, doesn't know he just doesn't know. The only thing he sees is enter, exit, like that like doesn't have the same personality, the same like maybe doesn't have the same patience. You know, like Wu says that it's gonna work out. Even though it works out for one trader, it doesn't mean that it can work out for many other traders. Like I think signals is those, I think they're bullshit. Like any content creator offering signals, I would run away from. I don't support that at all. So I also think people generally with signals try to look for quick money. There's no such thing as quick money. Like the only person that gets quick money with signals is the one offering the signals, not the one following the signals. The one offering the signals, you probably pay that person 4 signals. And that's where the money is made, basically. You know, I don't believe in signals. Yeah, I also think trading is very private. Everyone has their own bank account. Everyone has their own money. You know, you're not gonna walk across the street and then bump into a random person on the promenade or somewhere in the city and be like, "Yo, my portfolio size is this, and today I'm earning this," and you know, like you're not just gonna randomly to a random person talk about your money and show your trades, and yeah, I that's why I also never show trading stuff in the content. Why? It's not relevant. It doesn't help anyone. So yeah, either, and some people hate it, which is fine, because then I'm not the YouTube channel for you. You know, it's very easy. Yeah. You help build strategy, right, in Discord? Yes. Yeah. Actually, we're gonna work on with the morning routines. You maybe saw the breakout channel in Elite, which is this one. So here is the breakout channel. And what we're gonna do, which is funny, we're gonna do a little challenge. So what we're gonna do is we have a 200K breakout challenge, right? Prop firm challenge. And we're gonna build a strategy, a little bit of an innovation on what I already use. We're gonna collect data, and we're gonna collect the data. 1 second. We're gonna collect the data in Hexaplan, which is a company of Jeroen and myself. It's not yet live, by the way, but it will be. So we're gonna collect data here, and we're gonna just use, like, we can use a lot of different things. So like we can go to like strategies, development, we can make all sorts of stuff, build a new strategy. We are not like, we kind of have an idea of what we maybe want to use. So maybe like, you know, maybe we who knows, maybe you want to use Bollinger Bands moving out. And by the way, let's make it dark. So, and Fibonacci and whatever, and then you can go here and you can start collecting data, you know, make a hypothesis and whatnot. But yeah, we're gonna then go here and remove. Was it this one? Yes. And create a new strategy, basically. Collect the data. So I'm going to show the progress of collecting the data of separate tools and then combination and blah, 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 blah. We go through the different steps. where Hexaplan helps you to create a plan based on data, which will help with emotion. And then we're going to use that strategy to try and pass the 200K challenge. So it's going to be fun. I mean, I'm actually very excited. So it will take a little bit of time to collect the data, but that's the way it is. That's how it works. Yeah, and then we're going to use that like new strategy where we want to figure out the win rate, risk reward ratio, ideal area for the take profit, the stop loss, etc. And then we just execute that exact plan every single time, unrelated to necessarily other influences like pure Elliott Wave analysis or CVD or whatever. You just have that specific plan. And then see if we can pass it. It would be quite fun. So, yeah. Can you speak on what your tool Wave Charts is and how it works? I've only seen it mentioned in the comments. Yeah, so Wave Charts is this. Let me refresh this for a second. So Wave Charts looks like TradingView, right? That might be your first thought. Might be, that looks a lot like TradingView. But then you will figure out that it is not. There are a lot of functionality. So what is Wave Charts? If you want to hear it in one sentence, Wave Charts is TradingView for Elliott Wave analysts. If we like very in a nutshell. Because with TradingView, there's a lot of things that I miss as an Elliott Wave analyst, and I like to see those implemented. Now, what Wave Charts does is it will help you learn Elliott Wave Theory. It will help you implement Elliott Wave Theory. There's a lot of, I can't show it in the stream with the time I have left. But for example, if you have an impulse, right, I just click on the I because we actually have shortcuts. If you have an impulse, you have a wave 1, you get your common target area, uncommon and rare target area for wave 2. Common target area for wave 2 is between the 0.5786. I mean, the 382, we can arguably make it common. I can change the color. You can customize everything, by the way. Common FIB time area, 382 to the 2. Okay, it ends there. Cool. Move up. 38, like wave 3 common target area. Wave 4, wave 5. Okay. Now we have, if I click on everything, you can see them all. You can change this in the settings, wave level, like you can customize everything here. You can even say, is the 382 common? For like wave 2, right? Wave 3, what is common, what's not common. Maybe I need to make this, whoa, sorry for the flash there, I got shocked myself. Let's not do that. So you can customize everything, okay? Like the whole thing. And then if you are like in a wave 2 at the moment and wave 2 is finished and price is moving in the 3, then what you can do is right mouse click, internal count, wave 2, zigzag. You can be like A, B, wave C, and boom. Wave 2 now is internally a zigzag. Another thing that we have is that you don't need to put all of the counts on the chart. So what I can do is I can just put a 1 and a 2 and just have that. I don't need to randomly somewhere on the chart put a 3, a 4, and a 5. Like on TradingView, if I select the impulse tool, I'm now stuck. I need to put the 3, 4, 5 somewhere. Right, I can't not put it on the chart, and I find that annoying. Like I'm like, well, it's messing up my chart. So what we did is we created this, and now I can just continue. I can extend the wave and then go for 3, 4, and 5 again. Another thing that we have is you may have actually seen it. So for example, if we have a 5 wave up and a 3 wave down, right? I can right click and I can click on Auto Analyze, right? And auto analyze, like wave 1, wave 2, that is new. Wait 1 second. Where's my where is my tool for Jeroen is always updating wave charts. So he's the IT brain on the background. I'm more like the visionary guy. Oh, wait, I see. I need to use polyline, sorry. So it says, oh, wait. Do we have, let's look a little bit. Okay, so imagine we have a 5-wave structure here to the upside. and we select the polyline. Let me quickly select. So this is really cool. 1, 3, 4. So now we have a polyline, right? And this polyline shows 5 waves basically. So with the polyline, you can just select the amount of waves. And what then happens is you can right mouse click or, dude, Jeroen, help, extend polyline, no. Jeroen, where is it? Dude, where's the expectation? Trend, horizontal, polyline. Lol. Don't know where it moved. It used to be so easy. Long shorts. Wait, let me write Jeroen here. Where is the... Lol, can't find it. So Jeroen will answer in a second. He will come. But what we build, and I don't know where it is at the moment. So Jeroen is coming. He will see it. My message, but hopefully he's coming to the stream. Because I'm lost. Oh, he's typing. Where is it? Ah, okay, so that's where it's moved to. Okay, sorry. So here it is. Thank you. Oh yeah, okay, so there it is. So for example, we have an impulse to the upside. Thank you, Jeroen. He answered me quickly. So we have an impulse to the upside. What's really cool here is that we can now do the auto analyze, which basically gives you the different Elliott wave options. Now, don't be shocked. These are many different options, but on the bottom here, you can see what's common and what's not. So what's green is more common than what is orange. So I can turn orange off, for example, and only have green. Well, if you see, based on this structure at the high, the probabilities were highest for price to move down, right? And price, by the way, price is not reading the new price action. The only thing I gave to the platform is there's a 5-wave move to the upside here. And then basically you get this window, right? This is the decision tree. What is green is more common and what is orange is less common. So you can toggle them off if you want. And you see, you can read what's common. So impulse, 1, 2, 3, ABC, right? Double zigzag, like whatever you can turn on and off. And it will give you the polylines of what is the highest probability expected movement for price, which is a move down based on what you see here, the green lines, which was correct, right? Really, really cool. And the reason, like how we got to this is generally, so what I used to do with the Bitcoin updates in entry membership or in some YouTube videos is I did this myself by hand. I drew an Elliott Wave scenario and then I'm drawing the polylines, like what's expected. But in this platform, the platform does it for you. So you don't need to draw, study. It would be recommended, but you know what I mean? Now, the other thing that you can do is if I quickly remove this and I go down here. So we have, for example, like we have a 3-wave. Mind you that the numbers is not Elliott waves 1, 2, 3. Like I can just keep clicking. The only thing you do with this tool here is that you select the waves and then the system, you can give wait, let me just do this. So imagine you have a 3-wave structure, right? You can feed the system information here at the top. So there's a question mark, right? Can you see this? Yeah. So there's 3 question marks here. The first question mark is the first wave. The second question mark is the second wave. And the third question mark is obviously the third wave. And you can basically tell the system, well, this first wave is a 5-wave move internally. So you can click once on the question mark and it turns into a 5. If I click again, it turns into a 3. And now the first leg is a 3-wave structure. But let's say that the first leg is a 5-wave structure and the second leg is a 3-wave structure. And then I click on analyze, then these are all the options. Well, let's go back to what's more common. Based on the analysis, we're looking for a retracement to the downside, and then depending on the retracement, corrective or motive, We look for an impulse to the upside, 1, 2, 1, 2, 3, 4, 5, 4, 5. We're looking for maybe here, what's this, a diagonal, double zigzag, possible. Or something is finished, an ABC, and you look for price to move down. But in the short term, you are looking for a retracement to the downside. And then depending on the move down, is it 5, is it 3, we can like analyze again. So what I can do is I can wait, turn that off. There we go, turn that off. That's another thing. We can rep things in higher degrees and lower, like there's so much stuff. Like I can't show this in one live stream, but this is what we've been working on in the background. Like just like, and let me wait, like, so this is cool. Okay. Like this is, I can talk about this for a very, very beautiful long time. What's also really cool is what's on the side here. So if we count, for example, again, like an impulse, keep it simple, 1, 2, 3, 4, and 5, then we have a functionality. You can turn all these boxes off or change the color and whatnot. But we have a functionality that's called wave info at the right top. And then I can click on the structure and I get the information. So I get the structure. How should it look like, right? The rules, are the rules followed? Are the rules green or are they red? If I move wave 2 below wave 1, you can see there's a red rule. Okay, hey, that's not allowed in Elliott waves, right? There's a rule broken, so that must be wrong. Then you have the guidelines. Now, depending on how much information you feed the system, you'll see if all the guidelines are respected, yes or no. You see how the waves compare against one another. You can see the FIB levels over here, right? You can turn them on or off, just like this, right? Very simple. If you just want to do it quick, instead of going like right mouse click, settings, right? And then you can change stuff here as well if you want to, right? Wave 2, wave 3, 4, 5, right? So yeah, you always have the wave info here on the right as well, which will help you with education, right? It will help you with learning about Elliott waves, right? We have, for example, a zigzag. And we have shortcuts. So we use the I for impulse, the Z for zigzag, and other stuff. It's just very quick, right? So we have a zigzag here, right mouse click. Here you see the structure again and all this stuff, right? Yeah. So we've been working on this for, as you can imagine, a little bit of time. And yeah, it is ready for beta testing. Wait, so... so here it is, wave charts. So there's here we have announcements, general bug reports, feedback, and suggestions. So yeah, very nice. So and there's more, you know, there's more, but I just can't go through everything. We have some indicators as well for the people that like to use indicators. We have folders in folders. How about that? We have folders in folders. So for example, one second. Let me find the. Oh, there we go. The brush. I need to actually start favoriting my stuff. But imagine you're like pop, right? We have the object tree here, and we make this a folder. So we like can all select this. We make a folder. Beautiful, beautiful. Now, an annoyance I have in TradingView is that if Elliott wave counts are related, this is TradingView. If I am on a 15-minute time frame and I am counting an impulse up, then this impulse on the 1 hour time frame might be your wave 1 or A. But how nice would it be if you have your 1 hour time frame folder and you can just put your 15-minute folder in there instead of here? Look at this mess. Look at this mess in my object tree. Like, how nice is it if I can have a weekly bullish scenario and inside this folder, I put the daily bullish scenario because they are related. And then in there, I put the 4 hour and the 1 hour, and then you just stack the scenarios and it cleans up your object tree. So that is what we build. So we have, for example, number 1 folder, right? I can turn this on and off and all that stuff, just whatever. Then I have another scenario here, right? And I can again, this is scenario number 2. 1 second here. Make it a scenario 2. And now I can put this folder in the other folder. Ta-da! Clean object tree, right? Beautiful. And like, yeah. So, and now what you can do is just here, we have scenario 2 stuff, right? Like it's yeah. So now we can open scenario 2 as well. So it's folders in folders. So now I open the folders, and if I then click again in front of like beautiful, I will unlock what's inside the highest degree folder basically. But here I can just have a folder in a folder in a folder in a folder, and it just helps organizing the object tree. And like, don't forget, trading is a business. And if you can have a structured, clean business environment, then in my opinion, it will impact your performance. No? It's structure. So that is something we have implemented as well. Of course, you can make your photos and screenshots and whatnot. We have like settings, appearance, symbol, all the standard stuff is here, So, yeah. So beautiful. Can you explain different channels? I would recommend the channel video that I made in the educational playlist. 1 second. I gotta stop, by the way. Things you should know about as a trader. How to channel. I need to stop. I got carried away by the question about wave charts. Okay, it's time for me to wrap things up. It's my wife's birthday. It's time to spend some time with the wifesicle. So is this open or public? No, it's not yet public, but it's in beta testing. It will be public later this year is the plan. And it will, dude, I'm looking forward. Like, it's such a good platform. It's so, like, it's built for the Elliott Wave analyst. It's not built for the general analyst that likes to use order flow and not Elliott Waves. If you are an Elliott Wave analyst or you aspire to be one and you're in your study period, that platform will help you. It's so good. Does this the system it remembers, yeah, for sure. Like it saves your folder, just like TradingView. If I close TradingView and I open TradingView again, then the folders are there, right? It just saves the stuff. Yeah. So we're working on this, and hopefully you guys are gonna, for the ones that want an environment where you can not only count Elliott Waves, but get all the info and like all the, with the polyline system where the chart or the platform for you shows you the highest probability direction of price. Yeah. Anyway, I will make a tutorial or something in the future. Maybe I should do a live stream specifically on wave charts and explain the whole shebang. But I'm so excited about it. Like, it's such a cool platform. It's what I want as an Elliott Wave analyst. Like, the functionalities, the theory, the implementation, it's all there. It's so cool. So I'm very excited about it, in case you haven't noticed. So anyway, in this live stream, we did Elliott Wave analysis on Bitcoin. We covered the weekly, daily, 4 hour, 1 hour, 50 minute, and 1 minute time frame. And I will put some of the timestamps in the video later. Thanks for watching. Enjoy your weekend. Trade safe. We'll see what the weekend is going to bring. And that's going to be it. So yeah, glad some of you are excited. Thank you, Sasaki. So wave charts, it is coming. We're working on it. So anyway, thanks for watching, and I will see you at the next one.